Good evening, ladies and gentlemen. Welcome back to Walk the Block, where we are navigating digital finance all together. We got a bit of a follow up, kind of created a small little trilogy mini series here talking about Ethereum. We have another big update, this time actually from Vitalik himself. Ethereum has put out a new roadmap for what they expect to be doing pretty much from now through 2030, which, if you remember the last shows, that is pretty much when they also set another deadline to start of cut back on the amount of money that they're spending out of their coffers and how they're set up. So this should be a nice little cap to the Ethereum story that's ongoing. But related to that, we also have other news about other networks and assets that are moving, notably in the real world asset category, including Base, Solana, and we also have a small update on MicroStrategies and what they're up to. Hint: it's selling more Bitcoin apparently, which is not what we expected, but that is what it is. All right, we got a big show here for you guys tonight. Should be a lot of fun. I'm your host Zenith. I'm joined, of course, by my excellent co-host Tracker. How you doing, buddy?
Doing well, man. Doing well. Yeah, a lot of things moving. I think the narrative of this whole RWAs, real world assets recovery, we've been following for a while now, is that the war is starting to heat up amongst the networks. I think that's what it's going to be. Everyone's going to be fighting over the lion's shares, and you're starting to see it, and we're going to dive into that. And of course, we're going to get into the price actions as well. So yeah.
That's true. Can't forget about the markets and what's going on there. And that is actually a good little point to start at. So tell you what, let's go ahead and take a look at what's going on with the crypto markets lately. Alrighty, looking at the Bitcoin price, currently sitting $63,100. Last time we talked with you guys was right around this time, actually. And since then, we have actually come up a little bit. We've broken right through our 20-day moving average, and it appears that we're trying to hold above it. We got 3 retests so far across 4 days, and then we are looking at this 50-day moving average slowly creeping down towards us, and I expect that this is possibly be the next big retest area. But also what's going on here is that as our moving averages converge here, this could be some sort of signal for a reversal type opportunity. But again, it's not going to be immediate. It could be get rejected here, go back but down below the 20, and then hit our 60-day cycle low, and then try to move up through those a little bit, at least maybe for like a cycle or two in the summer. But only the future will tell on that one. As far as our 60-day cycle goes, we are on day 35. So the overall 60-day cycle picture has not changed. What we're looking at right now is a down cycle, meaning that we kind of already know which direction we're going to be going based on the overall shape. And by that, I mean that we have 2 separate points here where we actually dip below the start of our 60-day cycle. What that indicates to me is that, well, combine that with our day 10 high for the cycle and already trying to go to lower levels there, it indicates that the end of our cycle is going to be somewhere below this 58,000 mark, probably like 57, 56-ish, somewhere in there. Along the way, though, we can see a lot of other stuff develop. Like I mentioned, the 20-day moving averages and the 50-day moving averages, those will be interesting tests to see what happens. So realistically, over the next pretty much 2-3 weeks for the rest of the cycle, if it ends up being a little bit shorter than 60 days based on just things already looking down, indicating a bit of a shorter cycle with this very early cycle high, we could see testing this 50, testing the 20, maybe the 50 again, see those actually start to converge, go down, and then actually hit the cycle low. So your overall window for the next 3 weeks, in my personal opinion, is looking a little bearish. And there could be small pumps, but at the same time, with the amount of movement that we're talking about, it's not really much to do with when it comes to trading and stuff. So traders are definitely bummed out if they weren't already, and combine that with the overall dissatisfaction of the entire markets currently. Don't expect any big Bitcoin headlines coming in the future, especially in the mainstream media. So that's pretty much what I'm looking at. Track, are you seeing anything else when it comes to the price action over the next few weeks, other than hopefully one more decent little buy opportunity at the end of the 60-day cycle?
I mean, it's nice to see Bitcoin trying to get back over the 200 weekly moving average. I mean, that's definitely, it seems to be the area it's starting to fight with. I know we pointed that out for quite some time, that the 200 weekly moving average has always been an area that the Bitcoin price is pretty much doesn't like to stay below it very long. If it does, and similar to Ethereum, when it stays under there for, I think last time we were under a bear market for the Ethereum price, I think we didn't stay very long under the 200 weekly moving average. It's typically a buying opportunity there, but like everything else, it's hard to say what due to the past because TradFi is here. We always reiterate that all the time. But that 200 weekly moving average is been a pretty good indicator. Like if you're below the 200 weekly moving average, those are good buying opportunities historically. Could it go lower? Absolutely, could go lower. But you're paying the probabilities, and you're exacerbating and you're exhausting these sellers. Like there's so many Bitcoin and Ethereum holders that are underwater right now that you are essentially you got people just holding on. And I think the most of the selling pressure, I know the central exchanges were doing it, but the exchange traded funds have actually contributed to some of the selling pressure because, like we pointed out last week, TradFi is not used to these volatile moves in crypto. It's much more volatile than they're used to. So it probably has some selling pressure. But to go back to the price here, to me, it looks like maybe not the Bitcoin price, but the Ethereum price has put in a nice little double bottom. I'm not saying the bottom's in on Ethereum, but I'm saying it's given a really nice double bottom, clearly defined double bottom there. And now it's trying to, you got the weekly on, switch to the daily. I think the daily is a little bit more interesting. Like you got a clear double bottom here on the Ethereum network, and it's trying to make the move up, trying to come up. Like, are we gonna get a W bottom right here, where it starts to go up and then come back and retest? That would be a nice little sign. But we've seen this play out again. We saw it all back in, in Q1 all the way into early Q2. We saw that, and then we saw it also back in Q4 with Ethereum. So until it's proven the trend, do the actual trend reversal, it's basically expect more downside until it can prove that it can break the trend. Personally, for the Ethereum, I'm looking for right around between 1900 and 2000, right around that pocket. If Ethereum wants to make them bump up there, I will absolutely be taking short-term profits off, and just to raise up more dry powder. Long-term positions, midterm positions, all staying long. I'm not touching those, but from a trading opportunity, like you stated, we could see a little move up potentially, but we are going to probably retest and have a lower low or retest the lows in the 60-day cycle. So expect further to do the same. And I think just in theory, the good news is on the price action. With the macro news, with everything going on with wars on and off again, it seems like the overall markets are shrugging this stuff off. I think the overall markets, traditional markets, crypto, I think they're essentially, they understand they're going to be in this yo-yo effect action between war on, war off, and I think people are just becoming used to it. They're prepared. They know they have a blueprint if it's going to be on or not be on. I think they've digested the market, and I think they're prepared to go either way. And traditionally, the S&P 500, like you're looking at right now, looks like it's trying to break up. It's bumping up, trying to break out again to the upside, which is very nice to see. It's almost forming almost like a bullish flag at the very top here. Because keep in mind, like I said, outside of black swan events, traditional markets aren't going to just tank, right? They're just not going to tank like this. Normally, if you are going to have a trend or rolling, it's a slow rolling over process. It takes many months for it to trans. Look more like what happened back there into Q4, beginning of Q1 of this year. That's more of a rolling over look. That's what a rollover look. That's why most people thought that was going to roll over. And then, of course, we had the black swan event with the war. We got down, and then, of course, everything just shot right back up. It was a major fake out is what that was right there. But that's what you're going to tend to see, a reversal, how it would look like on a trend. So I still think things are going to keep moving sideways to up. I know there's also been a lot of talks on, this is kind of going outside of price action, but there's also been a lot of talks about rate hikes. It's almost like they're getting prepared for rate hikes. That's going to be put more pressure on whether that happens or not. I know the betting markets, I think, are thinking about 2 cuts at least this two rate hikes this year, which is surprising. We'll see if that happens or not because of the new Fed being a little more hawkish. I know that kind of comes outside of the price action, but there's just a lot of moving pieces right now that are it. But hey, the price action is what it is. I look like the crypto markets are holding up pretty well. The traditional markets are still hitting all-time highs. To me, but going back to the Ethereum, I'm more interested on Ethereum's price than I am on Bitcoin's, just because of it held up better. The ETH BTC ratio actually is looking pretty good. If you can bring that up, and of course, once again, hey, yep, this looked good back in it looked good back in February and March, and then we just decided to start sinking more. So I don't know, but that's it's trying to fight the trend. That's what I like seeing there on the ETH BTC ratio.
Very true. All fantastic points. Yeah, for the Federal Reserve stuff, what we are looking at is, rate hike talks. We're looking at 25% possible rate hike coming up for the next one, and then Polymarket has it actually similar-ish odds, looking at about 70, 78. This one's about 15%, that kind of stuff. But as far as Fed Watch stuff goes, I'm not too sure that we're going to see much action. I think honestly, we're probably going to stay flat for a couple Fed meetings, but that's going to evolve as the situation evolves. And then the other big one that you mentioned was, yeah, we did have flare-ups again over in the Middle East with Iran, and the president tweeting out effectively that the ceasefire is over or the agreement is ended. Pretty much what happened was it looks like Iran was attacking some commercial vessels in the Strait of Hormuz, possibly to redirect stuff or collect fees. The U.S. responded, hitting a bunch of targets and stuff, and then Iran responded to that and started hitting at a bunch of other U.S. linked sites in the Middle East as well. The good news about that one, though, is that, like you said, for the overall markets, this happened around the 6th or 7th of July is when this really kicked off, and that's going to be like this little area right here, and we saw basically nothing. It dipped a little bit, but then has come back. So, uh, I think you're spot on with your your
What's
analysis
that
there,
right
which is like
there? What is that? Is
what?
that the 50-day moving average? The orange?
Yeah, 50 is our
So right there, it looks like the 50-day moving average seems to be respecting that at least, which is a good way of the short term. That's something great to see that it is respecting the 50-day moving average. So that's nice. And that's the 200 week. Yeah, 200 week at the bottom. Okay, nice. The 20, I'm not too concerned about the 20. I'm more concerned about the 50. It tends to be a little bit more short-term trading. People look at that. So that's interesting. Is the 50-day going to be the one that it's going to start respecting and holding up to? That's interesting. If
yeah.
it
As
breaks
far
out
as
to the next upside, that's what I would look at. If I was trading the traditional markets, I'd wait for it to break out. If it breaks out, I'd wait to either wait for a breakout and then wait for it to come back and retest that 50-day moving average, and then that'd be your entry points. But no,
yeah, good stuff. As far as the moving averages on the overall markets, seeing this small crossover, it doesn't mean as much as the crypto markets where we get a lot more and better data consistently, but it could be an interesting point where it's like you think it's going to cross over, but it doesn't, and it would turn into one of those bull flag scenarios like you mentioned previously, where we kind of go sideways and down slightly until we hit kind of a critical point and then immediately blast up into the right out of it, that kind of a stuff.
well, yeah, I mean, you're just seeing a nice consolidation here for the S&P. It's digesting a pretty massive move that it took going
Oh yeah.
back when we had the first events of the war that kind of shook everybody up. That's what happened in February. It tanked hard and right at the end of March, and then it's going straight up. Now you're getting some consolidation. Traditionally, for most markets, you want to see it backfill to that breakout level. So you'd want to see the S&P come back eventually to the $7,000 range to have that. I mean, honestly, I'm not really worried about the traditional markets. It's just to see, as long as they just honestly for crypto folks, if we can just see the dang traditional markets just go sideways, that'd be fantastic. Like it's because you don't want to get too frothy. That it kind of having this, you can notice that the RSI is kind of calmed down a little bit, and it allows things to calm down and be digested properly. So honestly, if the S&P wants to like break out a little bit and then just kind of hover around those highs for a little bit to have sideways consolidation, I would prefer to see that than just keep going up. Plus, I would prefer to see more of a sideways action and maybe some rotation out of stocks into crypto, which we would all love to see.
That would be very nice. That would also be fantastic. And
Yeah.
I know for the folks at home, it may not make a whole lot of sense when we're like, oh yeah, if the average markets go sideways, that's a good thing. And it's like, why is that? And it's like, well, if you look from the crypto lens, crypto is severely undervalued compared to the rest of the market, which has been outperforming in all the different sectors, whether it's traditional finance, even real estate is going down slightly, but it's held up pretty well. Gold, silver, precious metals, all that kind of stuff, has been definitely out competing crypto. So to see the overall markets kind of calm down for a little bit, it's not saying that it's crashing or doing poorly. It's just like we've had a pretty tremendous move, especially in the last like 3-4 months here. That's a 21% move from the bottom of that dip. And if you want to take it from the previous top, yeah, it's 10% on top of what people already thought was the top of a market. So yeah, digestion would be good. And it's going to allow people to maybe reevaluate their positions and shift into maybe some of those crypto projects, which injection of capital is always a good thing, helps pump price up. But as far as even going sideways, it almost kind of shows that maybe the state of the world has calmed down a little bit, not just like pumping super hard in sectors or taking massive dumps from all the international conflicts and stuff, but kind of just a moment to chill, breathe, and get a little bit back to normal.
Well, if they would stop printing the money supply, things would calm down. I mean, that's
Uh,
essentially it. I mean, everything's correlated to the money supply, which it makes me think like, I know I was talking with others in chat rooms, but it was like the money supply keeps it, everything's is going up because the money supply is printing so much, yet crypto's not. So I got to ask the question, is crypto just being suppressed, or is the money supply not have any effect on the crypto market whatsoever?
wow,
I
what a
mean,
chart! Look at that.
yeah. So it's like everything goes up with the money supply, yet crypto is just I'm in the camp that crypto is being suppressed for whatever reason. I don't want to get into all that, but I think it's getting suppressed because of all the things we're going to talk about today. We're going to go into the like there's a lot of foundational building things getting put in place. um it, it benefits the folks that we're going to be diving into here. It's going to benefit them a lot by being able to get in here before things really start to take off. Whether it's being suppressed or not, we could disagree or agree to this all day long. It's irrelevant. It's just that the price is not moving yet. Every single thing in the world is going up, but crypto, and yet crypto here is going to be the future for the financial systems. It's going to be the platform communications for all of these networks that are going to get tokenized. I know we beat this drum to death. I know we're sick of talking about it, but it's it's crazy that this is what's going, and yet we're not getting any price action here. So I mean, to sit there and say that nothing's being artificially suppressed, we clearly know it is. I mean, we clearly know it is. And they're doing it through the ETFs, the spot ETFs. That's exactly how they're doing it. But that's here nor there. I think ultimately I'd like to see, like I said, to recap, I'd like to see Ethereum come up to the $1,900, $2,000 range, because I think that's a nice little 50% retrace on their fib from the highs that occurred in May to the dump that we had here on the double bottom in June, and mainly both in June, the double bottom. And I'd like to just see a little bit of a move up to that level. I'm then going to unwind some short-term positions, and then see if the market wants to come back and retest that. I'd love to put all that back on the table at that level. That's just my personal opinion. I'm going to plan to do just lower this DCA lower, and then we'll see what happens next, and we'll go from there. I mean, that's what I'm looking at right now. Me, I'm not really interested in Bitcoin right now, and I mean, owning Bitcoin, nothing wrong with holding Bitcoin whatsoever. I just think that there's more opportunities in Ethereum and other ones, and you're going to see why. We're going to dive into all this, of course.
Very true, and excellent segue, sir. So, starting up first, let's talk about the big boy in the room, aka Ethereum. So, we have Vitalik actually releasing the official roadmap for what's coming next with Ethereum. I got the article here, and I also do have his tweet, which I want to go through both. Thankfully, they're not too long, but they have some meat to them. So we'll break it down. Come to us from Crypto Adventure, your roadmap for the next 3 to 4 years by Vitalik. Released the multi-year lean Ethereum roadmap after Ethereum researchers met in Berlin following earlier client team discussions in Svalbard. The roadmap describes lean Ethereum as the next broad phase of protocol development rather than a single network upgrade. The work is expected to roll out through staged protocol changes over the next 3 to 4 years. The updated straw map sets 5 long-term goals for the base layer: faster L1 finality, gigagas L1 throughput, teragas L2 scaling, post-quantum cryptographic security, and private L1 transfers. StrawMap also says it is a work-in-progress coordination tool, not a locked schedule. As any project manager will tell you, yeah, your schedule's never locked. It covers possible forks through the end of the decade and notes that timing should be treated with caution because Ethereum upgrades still require research, testing, client implementation, and rough consensus. Yes and no, depending on which parts you're looking at. Some things are a little more almost finished. Other things like quantum scaling and protection, yeah, that's still very much a the race is still open on that one about who's getting there first and what it even looks like.
Well, just to stay there, just to interject on there, remember what we talked about last week. The biggest thing that the banking sectors and RWAs want is security. That's the number one thing. Security. Then it goes into like other pieces there too, but and then throughput. But really, those are the big pieces they will care about.
True. Alrighty, I am going to apologize in advance. This is a bit of a technical topic, but we're going to try to break it down as much as possible so that we can understand what's going on. Lean Ethereum would make recursive Starks a central part of the Ethereum's verification model. The roadmap points towards replacing more direct re execution with proof based verification, where complex computation can be proven once and verified more efficiently by the network. That would move Ethereum closer to an architecture where zero knowledge EVMs, proof aggregation, and real time proving support higher throughput without requiring every node to process the same workload in the same way. The straw map's gigagas L1 target is framed around 1 gigagas per second, or roughly 10,000 transactions per second at the base layer, while Terragas L2 targets around 1 gigabyte per second for roll-up data availability. Their neutron scaling path is already moving through scheduled protocol network, and their Glamsterdam upgrade has been testing EPBS, block building changes, and higher gas capacity targets after client teams gather. Okay, in English, what they're looking for is they are trying to make it so that they can do faster throughput and they can do better scaling with L2s so they can get more data per block effectively. And at the same time, do this in a way that's not going to just massively balloon gas fees or just strain on the overall network. This is stuff that we've already started to see be implemented on Ethereum as we've gone on over the last couple of years. This is why we saw a massive reduction in gas fees and stuff like that. This is another further upgrade on top of that to make it even more efficient. So, from a user standpoint, all good news in my opinion.
Just to add to that, just to dumb it down even more, so really it's real simple. Everybody talks about these networks being able to be scalable, which means how many things can I put on your network before it bogs it down? Well, if it can handle massive amounts of throughput like they're trying to accomplish, like they've already increased quite a bit, but this is really going to take it to even much more throughput. So you could essentially have massive amounts of adoption come to Ethereum because it can handle the amount of transactions that are going to be required for it to work. If you think about it, just for dumbing down purposes, if you remember, I know old school people with dial-up 50K dial-up modems, it would take you about an hour to download a song. Now you can download it on a phone or anything within seconds. It's extremely fast, and that is why throughput is so important, because the more companies that keep coming onto it, it's not going to affect anybody. You won't see any latency. It's kind of like sitting there watching your phone and it's buffering, or whatever you're watching, it's buffering because you have a lag somewhere. Nobody wants any latency. It's going to be a poor user experience. And if you're going to have a lot of complicated systems talking and communicating with each other, they have to be able to move data fast and lots of it. And that's essentially what it's going to do.
Very true. Well put, sir. Alrighty, this is where we go into the theoretical a little bit. Post-quantum and privacy become core goals. Okay. The roadmap puts post-quantum security and privacy into the roadmap instead of treating them as side projects. Post-quantum work would gradually replace cryptographic assumptions that could become vulnerable to quantum computers. The straw map's post-quantum L1 goal is based on hash-based schemes designed for long-term cryptographic security. That direction follows earlier Ethereum account level work on quantum resistant protection. Ethereum researcher Nico Consigni recently said that post quantum account protection can begin through smart account patterns before full protocol migration. Privacy is also listed as a first class L1 goal. The map points to private transfers at the base layer, while Vitalik's updates frame privacy as part of Ethereum's future architecture rather than an optional additional feature. The roadmap also includes security work through stronger formal verification, simpler client architecture, and possible long-term movement towards lower-level execution designs such as RASCV or Lean ISA under high-level Ethereum abstractions. Okay, in English again here. Second half first. Privacy being listed as a first-class L1 goal. This is, in my opinion, this is actually one of the big announcements here, and one of the things that users I think are going to care about the most, because what they're talking about here is that they're trying to build privacy and protection into the chain for users at a level that they haven't done so in the past. We've been talking about privacy tokens that have been doing really well lately. I'm talking like Monero, Zcash, that kind of stuff. I think Ethereum has seen the gains, or at least the demand for that kind of stuff, and sees that, okay, this is actually a bigger deal to our users than we initially thought. Because before they were all in on just like basics, smart contracts, DeFi, that kind of stuff, without really going into the privacy stuff. So all this, fantastic news. The more gobbledygook stuff. Oh, sorry, go for it.
Well, I was just going to, that part there is, that was the one thing that was pissing a lot of people off because of all of these L2s that kept getting spawned off. Now
Oh yeah.
L2s are basically essentially utilizing Ethereum's code base and everything, because layer one Ethereum would have L2. So everything that Ethereum had, these L2 networks would have everything that they had, and then whatever they wanted to build. Ethereum Foundation was leaning on these L2 networks to start implementing and trying to solve these problems. They've kind of now said, you know what, enough's enough. There's too many L2s. It's not working. We're going to hit it at the layer one for Ethereum so we can have full control over everything and be able to put this in place. And as far as the quantum computing thing, so all you have to understand this is quantum computing is basically taking a ton of processors, massive amounts of power, and it can solve a lot of complex problems. And one of the problems that people are scared about in crypto is cryptography. All you have to understand is cryptography is the security layer for how crypto is protected. Now you have a wallet, you have a seed phrase. The crypto is protected because it's using that cryptography. If you have a quantum computing that has all this power, it can crack those and basically steal your money. And that's been the big bugaboo threat to DeFi and other crypto, anything with wallets. And Ethereum is saying, like, we're going to make this a top priority. We're going to make it to where quantum computing will not become a threat. We're going to fix that. So that's another big thing that's used to come out. So basically, put all the worries aside for quantum computing's threatening to basically crack everyone's code and steal your coins. And the other piece that I stated there, as far as drawing a blank now, all the other piece here of the not just quantum computing, what was the other piece in here?
Privacy.
Or the L2, and putting at L1 instead of the L2 layers. That's essentially it.
Yeah, we've talked about this on a handful of times about the quantum computing threat. It's like, okay, to give you the elevator pitch for what quantum computing is, it is trying to use quantum mechanics, which is trying to utilize superposition of atoms that are correlated to each other. There has been a phenomenon discovered where you can have atoms correlate to each other. And what that means is that there's kind of like a direction about which they like spin or just kind of harmonize, and they'll line up in sync or actually be perfect inverses of each other. If you can get it to be perfect inverses of each other, and you can do this across a computer, theoretically, what that means is that you can straight up double your computing power by having this happen. A just pure doubling of computing power overnight is to the degree that it actually puts a lot of encryption at risk just based on how long it would take to crack these things. It shortens it not by half, but it's exponential gains on top of that as well. That's why the quantum threat is real, but at the same time, quantum computing is incredibly difficult because trying to keep superposition of atoms or the correlation for a long period of time is something very hard to do. Also, these computers have to be super cooled to near absolute zero temperatures in order to get anything reliable out of them. So it's a ton of energy that goes into it. It's a ton of complexity, and it's dealing with quantum mechanics, which is not certainty. It's dealing in a world of probabilities. As a result of this is why the quantum computing technology, we've been talking about this for over a decade, maybe even two at this point, and we're still not there. There are small scale, low level quantum computers that are viable to run, but not profitable. So if this actually gets solved, this becomes an issue. But at the same time, in my personal view, I don't see this being solved anytime in the near future. So as a result, quantum computing is not really a threat to encryption, and in particular crypto in this case. At the same time, though, it is a bit of a buzzword. And if they are actually looking to build into the future, this kind of is the next step of the technology. But at the same time, in my opinion, I think it's been very much overblown, and I think we're just not there yet. We are, honestly, I would argue we're closer to like general AI superintelligence than we are to quantum computing, to try to put it in perspective for folks. Alrighty, enough of that. Believe me, I hear myself trying to give explanations of quantum to people, and it sounds like I'm explaining black magic. And I'm like, in a way, it kind of is a little bit.
Yeah, but going back to what you're saying though, it has been a concern. So the fact that they're working on it will just make people feel more warm and fuzzy from a marketing standpoint. Is how it breaks down to be. But still, yeah, it was going to take some time, and it's going to take a massive amount of quantum power to be able to pull that off. But
yeah, I'm not worried about it. It's a bit of a headline. At the same time, though, if you're trying to protect against quantum computing, it honestly is just increasing your encryption protocol to a degree that's uncrackable by that. It's kind of like, when is something good enough? Encryption has been good enough for a long time because we figured out how to do it pretty well to the degree where computers are not going to be able to crack it for a while. This is just like, oh, we've kind of moved the bar on what's good enough. We just got to like get it back up a little bit further and we'll be fine.
Yep.
Yeah. Alrighty, last section here. Timeline still depends on fork execution. The lean Ethereum plan does not change Ethereum immediately. It gives researchers, client teams, and governance participants a shared direction for stage upgrades across consensus, execution, data availability, verification, and privacy. Ethereum's broader roadmap is also moving during a foundation restructuring. The protocol layer now sits inside a narrowed Ethereum foundation structure, focusing on scaling, privacy, security, censorship, resistance, and post quantum work, after the latest foundation reset shifted attention back to the execution roadmap. As of July 5th, Lean Ethereum remained a public roadmap direction with stage upgrades expected over the next 3 to 4 years and no single fork date assigned to the full overhaul. So that's pretty much your timeline right there. It's not going to be one big update of like, yes, we're gonna push the button and send the update. It's going to be small chunks and pieces working on things one at a time. And honestly, with the amount of stuff that we've covered in this already, I can understand why, because some of these are going to be easier to do. Others, quantum computing, are not and are not there yet.
And you know what though? But it makes a lot of sense now, because now what they probably, like you said, they were probably already structured this way, but the fact that they came out and they said that they were going to organize the Ethereum Foundation into sectors, like was it 5 different divisions in the Ethereum Foundation. So each one of those is focusing on its own areas. But see, this is a regular technology company, at least a small company. And honestly, this is considered like a mid-level tech company. It's how I consider the Ethereum Foundation. It's not a large company by all. It's what, 200 people, 150 now after the cuts at 20%. What is it down to? Like,
we're like at 220-ish.
Okay, so we'll say around 200. So that's a pretty small company. So yeah, they're just breaking up into smaller segments so they can focus on each piece. And then of course, like any other software development company, you're going to release them in different phases of that. And then so we'll have those rollouts. They'll come in as, maybe short-term hard forks. Typically, they come out every 6 to 18 months. So I'm expecting them to probably stay similar to that. And then as long as they're staying on the roadmap, that would be fantastic. So yeah, just the reason why I like us covering this, because the last 3 weeks, it seems like we're covering something with the Ethereum Foundation. First, it came with the Ethereum, with them cutting, I kind of look at it, trimming the fat.
Yeah,
and they've been but they've been criticized for a lot of stupid stuff that they've been doing. They haven't been proactive, haven't been moving enough. People want to see more actions. Well, you got it. They cut 20% of the force. They've restructured how they're going to run the foundation into 5 different departments, and now they're coming out with a freaking 3 to 4 year roadmap. It's like they are hitting on cylinders. And if they've got a good PR team and a marketing team, that's going to help them dramatically, because that's one thing that I think people are really bad. The people who seem to do really well at what they do are the worst people to cheerlead or market what they're doing. And then it's typically the other way around. You have great marketers, but the product sucks. So that if they can get them both right, that would be fantastic for Ethereum.
That's true, yeah. And I want to cover this real quick before we go to the broader what does it mean kind of thing. If you want the original post from Vitalik, you can find it over on X. Pretty much, he gives you a link to the straw map. Straw map looks like this, and it does not play nice with my browser, so I can't zoom in on anything. But it does give you the timeline, gives you some of the stuff that they're working on, and it's a good overall roadmap. Excellent visual thing here. As far as what he's actually talking about, pretty much saying Lean Ethereum is not a one-shot upgrade. It is a collection of improvements that will come online to the Ethereum network over the course of 3 or 4 years. But make no mistake, this is the 3rd major iteration of Ethereum, in the same way that the merge was the 2nd. The merge, by the way, is when they went from proof of work to proof of stake. So again, talking about pretty much everything we just covered. Verification through recursive Starks, replacing everything quantum vulnerable to quantum safe, consensus, decouple the available chain and finality, or 1 or 2 round finality, multi-dimensional gas, not just a tree structure, but types of state are available, and then changes to client architecture.
Do me a favor and go back to the straw man nav click that you had there near his post, because I know you can't see this, but I just want to explain it for people that are not used to this. So at the very, very top, I know you don't zoom in, I don't have to worry about it. The very, very top, you've got your years listed out from 2026 all the way up to 2029. And then what they're doing is they're telling you each one of these squares is a various release. And then the colors, the orange at top, the green in the middle, and the blue. So the orange is representing the consensus layer. And then you got basically the green is your data layer, and then the bottom is your execution layer. And then in those areas, you have different, on the left side, you've got various things like latency, accessibility, cryptography. That's the consensus layer at the orange. And in the green, you've got the throughput and types. And at the bottom, throughput, stability, EVM, and cryptography. So basically, this is how they break down the architectural breakdown of the Ethereum Foundation. We're definitely getting deep into software development right now. Is basically what we're doing here. So if you've not gotten used to this, it could be a little disturbing. But what's great about it is giving this level of detailed and visibility. This is more than what most companies will allow you to come into seeing what they're building. Like, they're really giving you full disclosures. What I'm trying to relate to. Like, they're not hiding something. They're showing you exactly what they're going after. They're not going to show you how they're doing it because of the propriety. They don't want to give away all their stuff, their technology, but at the same time, they're showing you how they're going to architecturally build this out and giving you a roadmap to go along with it, which is nice.
That's true. Yeah. This does tickle my project manager side a good bit, because it's like this is like an internal document at a high level that's very important, and the fact that they're sharing it with us is fantastic. That's great. Now you do have to execute on it, unfortunately, which, especially when it comes to software development, it's not like traditional projects, which is like you do the whole project and then you hand over the keys to your project to the customer at the end after like 2 years and you're like, ta-da. It's like, no. For software development, you try to keep your customer happy by producing small bits of code that are immediately available and useful. It's like, I'm not going to build out your entire website and then release it at once. It's like, I'm going to give you a homepage. I'm going to give you a directory. I'm going to give you another important page. And then we're going to keep going down the list from there. This one pretty much does that, but also they do have the nice tie-in together at the end there in 2029, which does look good. So there you go. Alrighty. I do want to cover this guy a little bit more. So again, it talks about a lot of the same stuff we did, because obviously that article was based on this. But one of the key things here is this new style state would work very well for ERC20s, NFTs, and many DeFi use cases, but not e.g. highly central objects like Uniswap contracts or on-chain order books or other complex things which are crucial for Ethereum, but which only take up a small percentage of state. Hence, it will not be necessary to rewrite any apps, but it will be very cost-effective to rewrite an ERC20 token into a newer design that uses a new type of UTXO storage that is currently being explored, so that it will have 10x lower transaction fees. This is kind of just a little snippet I wanted to talk about, because it is a fundamental upgrade to Ethereum. And he made that very clear in his statement, which did not come through previously. It's like, this is what we're looking at there at the end of that roadmap. Is Ethereum 3.0. We're kind of operating on 2.0 right now. This is the next major step forward, and it is going to affect everything on chain, especially all the different protocols, tokens, projects, applications, whatever it is. He mentions that they're doing this in a way so that things that are working on the EVM machine as it is will also be compatible with the next virtual machine that they're pretty much putting out there. As regards to, do you have to change? No. Would it be better if you did? Yeah, because you would actually be able to optimize for it. So this little tidbit here, in my opinion, is Vitalik kind of calling out to the builders and the people that have projects. They're like, look, your stuff's going to work, which is good news. But at the same time, if you want to really take advantage of this, it's going to require some additional work on your guys' end to actually become like fully efficient, fully compatible, all that kind of stuff.
What I like about it is they're giving the users options. You can stay; it'll work, it'll be fine. But if you want to better utilize these new features that are going to make your project be a lot more user friendly, or gather this, then you're going to have to update to do it, though. But at least you're giving the customer options, which is always the way to go.
Yeah, and this one right here he's talking a little bit more about that. He says Ethereum will have to have a virtual machine other than EVM in one form or another. At the very least, we need something like lean ISA for recursive starks, and the gains are large in exposing it to users so that we support programmable privacy and better scalability. Right now, most likely contenders are lean ISA and RISC-V. Again, he's pretty much saying like, look, we've been talking about improving privacy. We've been talking about improving efficiency. It's going to be there, but it's only going to really work if you guys also get on board with it. Yeah. And then pretty much finish it off with a nice little picture of it and says,
what's that gas limits? What's that gas right there? Gas limits increased increases, blob increases.
Blob increases and slot time decreases and will happen over many times over the next 5 years. We expect a large gas limit increase with Glamsterdam. Each step of increased scale or decreased slot time is a matter of getting to the point where it is safe to do it, which comes from a combination of client optimization and protocol changes. Yeah.
Okay, got it. I'm just more worried about the gas. Everyone's always worried about the gas. The gas has gotten so cheap now on Ethereum, it's ridiculous.
That's true.
Compared to what it was comical.
Yeah.
And
Ethereum by the way,
crops, that's funny.
Some people down in the comment section have already done the Lord's work for us. Grok, explain this tweet to me like I'm 5. Hey kiddo, imagine Ethereum is one gigantic magic notebook where everyone writes who has many shiny coins and plays fun games. Vitalik and his friends just plan a big upgrade over the next few years called Lean Ethereum. It's like cleaning the notebook, making it bigger, faster, and safer so millions more kids can play without it getting slow or messy. They're adding super clever math, so checks happen lightning fast, secret hiding spots so nobody can peek at your games, safe pages that future robot hackers can't break, and special cheat pages for simple games and normal pages for very big ones. Your old games will still work, but new ones will cost almost nothing to play. The whole notebook is getting a huge glow up. There you go. That's the TLDR right there.
That's funny. That's great. That's
Alrighty.
great.
So let's dovetail this with the other 2 streams that we've done. Stream number 1, Ethereum Foundation had layoffs and they reduced their budget by 40%. Not great news, as we covered. Stream number 2.
I thought it was 20. Was it 20 or 4? I thought it was 20.
They laid off 20% of the workforce and they decreased the operational expenditures for the year for 40%. Yeah.
Oh, okay. I got you. Roger that.
Stream number 2, they launched the Ethereum Institution and they still have the Ethereum Foundation. The institution is targeting institutional investors and trying to get that scale of people on there. Stream number 3, we now have the roadmap about what they're trying to do. If you remember back on the first one, we were like, look, layoffs and cutting costs, it's not a great look. I understand you're trying to like really give people the beans on this one and be like, oh, yeah, we're going to be great. It's going to be awesome. And then number 2 was like, okay, they're actually making moves. They're actually like making the split so they can have the institutional stuff. This was that thing that we asked for at the end of stream 1 and stream 2, which is like, great press release. Where's the roadmap? And you were hammering this point home big. So now that we have the roadmap, does this answer all the questions that you had?
Yes. Like you said, so far they're getting everything out in front of everybody very quickly. And I know we're going to dive into probably why they're moving quickly now. They got a fire lit under their butts. They move quicker now and stuff. And we're about to go into the why factor, why they're moving. But now, like you said, they have to execute these things. I think their biggest problem though is they're not marketing themselves. They have a good product, everything's good, but they're not. Their PR, their public the public relations folks, the marketing teams, they've got to put money into that. They got to have that. And Vitalik ain't your guy. He is not the guy to be doing that. He's your guy. He's your architect or what he's going to do. You throw him over there and leave those guys alone. Let them do their thing. You need to bring somebody in here. To kind of piggyback off of this, though, what we talked about with Tom Lee and not MicroStrategies, but they're Bitmine, not Bitmine, but is that who's Tom Lee with?
Bitmine and Sharplink Gaming.
Okay, so remember what they said that they were going to do with theirs. They're partnering with Mr. Beast. Remember we went over that whole thing? And now marketing, they're going to tie in Mr. Beast. Well, why the hell do I care about Mr. Beast? Well, for everybody who's a boomer or Gen X, you probably don't care. But for the new population, Mr. Beast is a brand that's massive marketing. I kind of look at Mr. Beast like, I don't know, Johnny Carson and Tonight Show for the boomers, right? I look at it like that. Where information is going to go, that's where it's going to go. That's where the marketing is going to be. Like you want the younger generations to get on with the new advancements in crypto and where we're going. That's your portal there. That's going to be a huge influencer who's going to tie in, that could bring it in. That's why Tom Lee and those areas have invested into Mr. Beast, because they see that as a marketing platform to bring in the young people. And he clearly stated that. They understand that the boomer generation is going to retire here, and there's going to be a big, massive wealth transfer. And this is where all this stuff is starting to come together, right? Like everything's tokenizing, everything's going to go in this direction. And yet, how are you going to suck in the young generations to get on board with this that are going to see it? And that's where your marketing comes into play. So essentially, does Ethereum need to do the marketing and all this, or does Tom Lee and their company almost handle this for them in that sense? I don't know, because one thing I haven't heard is, and maybe they have, I haven't seen a whole lot, like where is that company, Tom Lee, and having open discussions with the Ethereum Foundation. Like, I haven't seen that kind of level of partnership that you think should be there. They kind
No,
of go
we've
hand
never
in
seen that.
hand. I mean, they essentially are forming a partnership, even though, because their whole model is based on the productivity of the Ethereum network, right? And how it does. It just seems like it go hand. So I wouldn't be surprised if you see that come out next, where you might start to see the Ethereum Foundation and Tom Lee and his company and them start to merge together, because they benefit directly, and they both are looking for the same direction to go and benefit from it. So anyhow, I bring that up because it did remind me of the Mr. Beast thing, and then people were looking like, why the hell do I care about Mr. Beast? That's because he's built a massive networking conglomerate for the young generations, and if they can start to use that platform to persuade young investors to move in that direction, that's why it ties in to be so important.
It's true. Yeah, Mr. Beast at current day is the largest media and entertainment channel on the internet compared to everybody else by like a factor of 10 almost. It
Mhm.
is he is so unfathomably large in the internet space that I think traditional media folks will have a hard time understanding. That's why it's
Yep.
big. But
Yep.
there is a kind of a bit of an irony, which is like Tom Lee's kind of doing Vitalik's job better than he ever did when it comes to the promotion and stuff. But the Ethereum Foundation, they specifically dedicated public relations funds, activities, people for it. We've never really seen Tom Lee or Vitalik kind of like talk about each other. They always talk about like what they're doing, which is
Mhm.
fantastic because you got to talk your book.
Mhm.
But at the same time, it's like you guys are kind of like the two giants in the space. Granted, Vitalik is like the big one, and Tom Lee is
Mhm.
like the number two guy, effectively. But the fact that we haven't seen that open coordination, or at least just like talks in public, does seem a little bit odd. But
Right,
at the same time,
because it's not like MicroStrategy and Micro Saylor has somebody to go talk to at Bitcoin. It's not a,
yeah,
you
Sailor's
know,
not talking to Satoshi. No,
yeah, there's
not a
nobody
thing.
talking. Like, Bitcoin's just there. It's there, and it's thing. Ethereum is building a platform. This is a whole foundation. It's building upon that. All of these L2s and so many companies in the crypto world, just, if you strangle, that's what we talked about. If you wanted to suppress all the L1s or suppress the entire alt season, just stranglehold Ethereum, and that's essentially what they've done. They completely they suppressed Ethereum, and it shut down everything just about. There's a couple ones that popped out, Solana and a few, but I get that. But what I'm saying though is, if Tom Lee and them can merge it, that makes a lot of sense. Let the foundation do their thing, do the infrastructure and building, and let Tom Lee and them handle the marketing and all that stuff. To me, that, like, it just seems to me that's a perfect marriage right there. Like, they could do. And Tom Lee's a hell of a cheerleader too. He can get out there and talk, and he can, do PowerPoint presentations and all this stuff, and pitch the ideas of what's going on. But yeah, I would like to see a little bit more there. That would be interesting.
Yeah, and as Tom Lee can definitely come off as pretty dry, but even at the same time, him compared to Vitalik, he just has an X factor to him that Vitalik just like never seemed to kind of quite capture. But Tom Lee has it. He's
Oh,
still
don't
very
get me wrong.
technical, but at the same time, it's just something about the way that he speaks about like the future and what they're building and all the possibility. It has a little bit of that wonder to it. It just
What I'm
kind of
saying is,
really captures you.
yeah, but all right, how do I put? Vitalik would be perfect to talk at a developers convention or the hackers convention, things like that's your audience there.
Oh yeah,
Other developers and architects. Tom Lee is your guy to talk to TradFi.
yeah,
That's
he's
why
mastered the
that's
soundbite.
perfect for TradFi. Now, Mr. Peace is perfect from just mass marketing to the younger ones. But I think they also were talking about partnering with other companies. So now I forgot which present we talked about in some stream. I forgot, but they had all these partnerships that they were loading up on. And Mr. Beast was the one that jumped out to me for the younger generation. But they had something kind of in there for the Gen Xers and that kind of thing. They had those portals there, and I think they were talking about the portals with the baby boomers were basically traditional finance type companies. So they hit every generation on that marketing spectrum on how to attack that. And that's what I thought was interesting. So, like, what we're basically saying is they're starting to find all the right people are trying to put on the right hats to help Ethereum thrive. That's the best way to
Yeah.
put it.
As far as the wrap up to our little Ethereum saga here,
Hmm.
We got the roadmap that we asked for. It appears that they're addressing some of the core things people have been worried about. Number one has always been gas issues. Number two is safety and security. Privacy has always been this like mystical third thing that we thought we never were going to get, but now it appears that they're actually taking it seriously. And then fourth is the
Scalability,
yeah,
scalability too.
scalability, and then the quantum stuff at the end sprinkled in. So overall, look, their position is still exactly where they are. I think at the end of the other streams, which is they're still number two, head and shoulders above the competition. They've taken a hit when it comes to the overall brand and just the product hasn't deteriorated, but it's kind of stagnated a little bit, even through all the upgrades, which sounds crazy to say. But a lot of that is still due to price action. So this roadmap, it's a great look. And as far as the PR that they do have going for them, this is honestly probably the best way to handle the current situation that they're in, which is like they had the layoffs. They're like, oh, we're launching a new Ethereum institutional. It's like, okay, cool. Doesn't affect us. And now we get the roadmap. It's like, okay, this will affect you. But at the same time, great announcement. We're going to have to see it in action. So overall, this does make me happier. I think it shows that they do have a vision of what they want to do and what they're prioritizing and finding valuable and what they think their customers are going to find valuable. And I think that it's a good step forward and it's a great announcement, but we got to see them execute on it because if they don't, the rest of the competition is going to catch up.
Wouldn't hurt either if Tom Lee took some of that, all that crazy amount of money, and kind of just buy the top talent for the Ethereum Foundation too. I mean, who knows? Maybe this has been going on behind closed doors we don't even know about. But anyhow,
Maybe. Alrighty. Speaking of the competition, let's see what's going on. Well, how about this one? We banks. The banks. You thought they were competition? Apparently they are. Alrighty, coming to us from Be In Crypto. Over 15 banks race to tokenize finance, and it could affect Bitcoin. Ethereum too. Bitcoin's just the attention grabber. More than 15 of the world's largest banks, oh gosh, get out of here, are building tokenized finance on private blockchains, and JP Morgan says that shift, not MicroStrategy, poses the bigger long-term threat to Bitcoin. The bank's analysis argued that if payments and assets move onto permissioned networks, public blockchains could lose activity, liquidity, and capital over time. JP Morgan's Connexus platform has processed more than $3 trillion since inception and now clears over $7 billion a day. JP Morgan built it as Onyx back in 2020 and renamed it to Connexus in 2024 as Jamie Dimon kept criticizing Bitcoin. Much of this activity runs on shared permissioned networks. On the Canton network, DTCC is tokenizing the U.S. Treasuries it custodies with a 2026 target. HSBC, that's another large bank, has completed a tokenized deposit pilot there, and Goldman Sachs settles tokenized bonds on the same rails. That institutional poll now shows up in the fee data. And Canton ranked as a top fee generating chain this year. It earned about $60 million in 30 days to late June versus 11 million versus Ethereum, according to DeFi Lana. This push extends well beyond any single firm. More than 15 major banks are named in a shared tokenized deposit network from the clearinghouse. The effort is a part of a much wider move to tokenized institutional settlement targeting a 2027 launch, according to Payments. There you go. The banks are starting to move. We've talked about this in the past. Previously, it was JP Morgan Chase that was playing around with a private network based on Avalanche. But now, what I'm getting from this article is they're saying that this could actually be a larger potential risk to the overall crypto ecosystem than people originally thought, because they're hoping to get this money on chain. But what if it goes to a chain that they will never be able to touch?
now scroll down to the one in the middle here, the DTCC. Right now, this one's the huge one. This is the 800-pound gorilla in the room that everybody's looking at. The DTCS, the Deposit Trust and Clearing Corporation. That's what it stands for. This is the major U.S.-based financial marketing infrastructure company that provides clearing, settlement, custodian, and asset servicing for the securities industry. All right. You want to have any idea how much that is? It's 87 to 114 trillion dollars. Okay. Now, crypto market sitting over here at a whole measly $2 trillion, the entire crypto market, right? And that's mainly Bitcoin. So even if you took Bitcoin out of the picture, what is the entire one? I don't know. We'll still say $1 trillion for argument's sake. But where we're going here with this is all moving to these networks. When you move stuff to these networks that we talked about, it's going to bring value to the networks. That's just how it works. So you're talking about moving basically when you say DTS, the DTCC, that's basically all the money in the world. There's more money there than there is in the world because it's leveraged at 100x, right? It's insane. We can go down to whether it should or should not be able to do this, but that's a whole nother thing. But what we're getting at here is these are all the big players that are starting to move, and there's every bank out here, and this article doesn't even get into it. We already know the big three, the Vanguards, the State Streets, the Black Rocks, the Goldman and Snatch and them, all of those guys, right? They're all on here going down this rabbit hole. All of them are moving over here. So we tied it all together because if you look at the Ethereum, all the moves that they're doing, why are they so aggressive all of a sudden? Well, they're getting aggressive because this is starting to happen. You're going to put that much tokenized assets on a network, you better be scalable. It sure as heck better be secure. Scalable, and scalable means you're going to also have to be able to take handle the throughput, and all those things you saw on the roadmap that the Ethereum Foundation put into place was all about addressing this. Now, why is that? Well, a lot of these different networks are starting to get tapped on the shoulder. The DTCC actually tapped, I want to say it was either Ripple or XRP. They tapped on to ask the question, could you guys look to see maybe tokenizing this? Now, keep in mind, there is a lot of shady news flying around. So there's a lot of just, you don't know what's real and not real at this point. Okay, there's just, what we're saying here is there's a lot of people moving and they're trying to decide where they want to tokenize what networks right now. So they're all scrambling. I know you got a couple other articles here talking about like why we're seeing some of these other networks that are starting to spike up with volumes too, right?
Yes, sir. Speaking of which, coming to us from Crypto Slate, Ethereum is losing ownership of crypto payments as Base moves $500 billion in stablecoins. Stablecoin activity is becoming it's a good one. Stablecoin activity is becoming a contest over which blockchain moved the most tokenized dollars. Visa on-chain analytics showed that the adjusted stablecoin transaction volume reached around 1.8 trillion in June, surpassing its February high and rising sharply in May. The key network split was tight. Base ranked first at $565 billion in adjusted volume, just ahead of Ethereum, who was roughly at $562 billion. So $3 billion gap there. Not massive. That's less than a percentage point based on the volumes that we're looking at. But I can guarantee you one of these blockchains has been around about 10 times longer than the other one. So just quick analytic thing here for you. Stablecoin flow. There's your volume. There's your comparison. The issuer mix, USDC is still by and large the number one stablecoin as it stands. Tether is sitting around the third of it. And then why adjusted volume matters, it filters out bots, reduces internal transfers, and focuses on settlement-like flow. So it's trying to look at like real transactions as opposed to kind of just a lot of noise or almost like kind of ghost sales or wash sales or whatever you want to talk about.
Or just arbitrage trading.
That too as well, yeah. While the edge Base might have over Ethereum be small, it is still a significant achievement. Base is a layer 2 network built around cheaper Ethereum, faster Ethereum activity. When it rises to the top of an adjusted stablecoin flow table, it shifts attention from token supply to payment distribution, wallets, fees, app integrations, and settlement availability. Visa's dashboard separates adjusted and unadjusted activity because raw blockchain volume can include bots, high-frequency wallets, internal smart contract movement, and all the other stuff we just mentioned. Adjusted methodology, developed with Alien and other partners, tries to strip out that noise and get closer to the activities. The filters are still a best guess approach, and Visa says it will continue improving the methodology and labeling coverage as labeling coverage expands. Even with that limitation, adjusted volume is more useful for the base Ethereum comparison than raw transfer volume alone. Where's more? Visa's insight page has already pointed to a much longer L2 trend, noting that L2 networks collectively surpassed Ethereum in monthly stablecoin transaction count back in August of 2024, and that Base saw rapid USDC growth after launching in 2023. June's volume data shows that the same pattern is beginning to appear in adjusted dollar flows. However, the lead remains narrow. Base topped Ethereum by only about $3 billion, and with both networks clearing more than $500 billion in adjusted volume, the next signal is whether L2s continue to capture payment-like stablecoin activity across multiple months and multiple different market conditions. All right.
Curious
Base is
what they
doing
think
well.
what L2 is. I'm curious what they think. Obviously, base is an L2. We already talked about that. But keep in mind, Ethereum is now saying they're focusing their attention to handling the problems at L1s and not focusing on L2s anymore. So it'll be interesting at that. So right there, they're trying to just, I don't know. It depends how you look at it. They could look at it like, okay, hey, we're going to solve the problem and that L2s will be able to benefit from it. Or hey, Ethereum might just fix it and be like, okay, we're done with the L2s. Because here's the argument that everybody had with Ethereum. Ethereum was just giving away all the hard work they were doing. They were just handing it to the L2s. And the L2s were capturing and profiting off all of it. That was
Oh
the
yeah.
big knock. So is Ethereum Foundation going to start gatekeeping this maybe cutting off the L2s with having this direct access to what it is? That's going to be an interesting to see what happens because base doesn't go without Ethereum. So it's going to be interesting to see what they do there. And there's other ones out there too, I know. But just looking at it again here on the networks. Well, go ahead and figure if we go on to the next network. I know you got another one here you want to cover. Let's focus on that one too before we dive into
Yes,
what the
sir.
charts are saying.
The number 3 network or the number 1 meme coin network, depending on how you look at it.
Huh?
Again, from Crypto Slate, Solana's 8.7 billion real-world asset surge shows tokenized assets are finally starting to move. The Solana's RWA transfer volume more than doubled over the past month, giving the network a stronger signal that tokenized assets are beginning to circulate rather than sit on chain after issuance. RWA.xyz showed their 30-day transfer at about 8.68 billion as of July 6th, up from 30 days earlier. Distributed asset value rose 36.2% over the same period to 3.5 billion. Solana's own data showed a similar increase in turnover in a related market. The network said tokenized asset spot volume across DeFi exchanges grew from 2.7 billion in the first quarter to 5.7 billion in the second quarter. A year later, the figure was near zero. Quick little chart for you here. Tokenized, this is by DEX, what we're looking at here. So it shows you all the different DEXs that they got going on there. Those figures are becoming more important as tokenization moves beyond early pilots. A tokenized fund share, equity wrapper, or cash equivalent instrument can increase a blockchain's reported asset value when it is issued. Moving those assets requires users, platforms, or institutions to push them through trading, settlement, collateral, or liquidity management workflows. At a glance, real world assets starting to heat up on Solana, which is honestly not one that we kind of had expected there.
Well, yes and no. We've already told everybody that, and everybody kind of in crypto has known this for a while. Solana is the U.S. network. So if you're going to build anything internally in the network of the United States, you're going to pick the Solana network, which would make sense to tie Solana network to all these internal networks. Can you click on the link I sent you? Is the app RWA XYZ?
Yes.
That's basically what they're talking about. It's DeFi Llama is a great one to look at, but I like this one here. It's a little cleaner to look at if you see that one. And I go down and click on networks on the left side, all the way on the left, the short hands. Go down to networks. Go down right there.
Nice little view here.
Yeah, so you can see here how everything's been growing, but if you hover over that, put your cursor over that map. What you clicked on. Yeah, just hover over that. No, move your cursor up. Move it up. Move your cursor. No, don't do that. There you go. There you go. So now you can see the Ethereum prices there, but you can see how base is still so minuscule. It's tiny. It's what are we at? 400 million. So I know they're talking about transactions and stuff, and I understand that. But right now, if you're looking at it, base is sitting on like $313 million. Ethereum's sitting on 16
billion.
Yeah, 16 billion. I mean, it's not even close. Now, if the reason why we like bringing this one up is so Ethereum's making moves, right? Because they're feeling the heat by these other networks making the move, right? That's essentially what's going on here. Why Ethereum is starting to really move because competition's starting to step up. The big ones, BNB. Now, to me, Binance BNB is more interesting because so you have the Ethereum, which is like kind of like the overall network. That's the big DeFi one. That's the one that's been around forever. It's got the most lion's share. But then you got BNB, which is traditionally more international, while you've always got Solana, which is more US strategic. And don't get me wrong, there's some in the Asian markets that actually pick up too, but BNB is more the one that's been focused overseas, which has been interesting, which is why I thought it was interesting how I think there was an article last week we were looking at how Binance is being threatened to be able to operate in the EU or in European countries, which I thought was crazy because, I mean, that's where they're dominant in. So anyhow, you have Solana here, and then of course Stellar. Now Stellar is the one actually I was thinking about. Stellar is the one where we had them asking, could they basically move this? And that's the DTCC we're talking about, the one in charge of all of the security industries. They're the ones that tap them on the shoulder and like, hey, could you look at potentially what it would take for you guys to tokenize everything on there? Which I can tell you right now, I don't know how the heck Stellar would be able to handle that kind of throughput. We're talking $100 trillion of assets potentially, or whatever it is. Like, I just don't see that. The Liquid network, I don't have enough to know about the Liquid. Avalanche has been interesting because we know that Avalanche has done some pretty interesting things. The one that came to mind on me that was they did about a year ago was they partnered with New Jersey and they tokenized about 3,500 real estate properties, which I thought was pretty cool to see. So Avalanche is one that's been interesting. It's making some moves. Arbitrum is on there, but Arbitrum's another L2 basically, right? And then Polygon, XRP. So but you look at this map and you can see, put your cursor back over there, and it's the numbers are not even close. Like Ethereum is at almost $17 billion. We'll say 16 billion for argument's sake, and then BNB's at 4 billion. And then Solana is at another maybe 3 billion, 3 billion in Stellar. So those three combined don't even come close to the Ethereum network. So this is why if Ethereum wants to keep the shares, they're going to have to start moving, and this is why you're seeing all the action they're doing. So it's going to be, the war is on basically for the real RWAs.
That's true. And by the way, the answer to why Solana has been catching up when it comes to the RWAs is the stocks that have actually been going live on Solana. We had the SpaceX launch, that was part of it. And we've also got an announcement of a handful of other stocks that are tokenized stocks that have actually gone live on the Solana blockchain network. So as a result of that, obviously we had about, was it 300 million? 300 million that came through for SpaceX alone in like the first 24 or 48 hours. So that's a good chunk right there. So as far as RWAs, I think Solana is starting to carve out a bit of a niche when it comes to, it's like, hey, we are tokenized stocks. They're coming here. We're the first ones to have them, and they appear to be working and doing well. And there's also consumer interest, which is the other big point to it. Because it's like, sure, I can shove it on a blockchain, but it only matters if people care about it. And well, it appears people have been caring about it.
And that's the other thing why I think Solana's got the edge here. So let's look at what Solana has. Keep in mind, a lot of major crypto influencers, we're certainly not in that block. We don't have 1 million subscribers. We'd like to, if you guys would like to subscribe and like anything. But the big influencers, it's funny, like for a little while here over the last 2-3 weeks, they've been pushing Solana again. And so somebody is paying and shilling them to push Solana. Now you're seeing Solana also, these aren't just magically just randomly occurring, right? They're pushing it out there on the large shills. They're shilling it through the major influencers. Then they're going to turn around and you've got the them tokenizing, which makes sense because these are U.S. stock trading companies. They're going to tokenize those assets and put them on Solana. Why? Because it's a U.S.-based Solana network. This is why I think internally, this is what Solana's big selling point is going to be. They got the marketers, they got the U.S. backing it, and they've got all the big tech companies here in the United States. So if you wanted to build on it, it's probably going to be Solana. I would prefer it to be Ethereum. I'm not saying Ethereum is going to be out of it, but if you're going to bet on Solana, that's why you would bet on Solana. For that right there. And Solana is trying to also solve a more complex problem with how they're doing their network. But once again, what is the number one thing that they need? Security, stability. Well, Solana has crashed over the years. Ethereum has not crashed over the years. So stability goes to Ethereum. Security goes to Ethereum. So the two big talking points, Ethereum has check and check. And what are they doing? Now they got a roadmap where they're going to double down and really attack it even more to where it's not even going to be close to what they're comparing. So like we said, the war is on as far as RWAs, and this is what you're going to see, a cat race. So if you're trying to build out a portfolio on all that, you invest as you see fit. It's just, we're trying to lay all this out to you as far as what's out there. You got BNB in the race. You got Solana. We know that. The other one out there. The only reason I would even bring up I'm drawing a blank here on the other one. Stellar is because they got tapped on the shoulder by the DTCC. But who's to say that that may not transpire in anything? That might be nothing. Just because these things are being tapped on, who knows? They might have tapped on multiple people's shoulders to say, hey, can you start giving me a proof of concept of shopping around who we want to go with. I mean, that's probably what they're doing. That story might have leaked though, so you got to be careful on all this information coming out and see through the lens. But right now, to me, Ethereum is still there. Are they going to maintain it? BNB is more international. Solana is more US intrinsic. And I think that if you're looking at RWAs, those are the three big ones you're going to want to probably look at if you're trying to add to your portfolio, if you want to capture the RWA narrative as far as investing for the next so many years, because it's going to grow dramatically. Not financial advice. I'm just throwing that out there as far as the pieces that seem to be gravitating toward it. And obviously more of a lower hanging fruit Avalanche is probably one out there I'd be interested, just because they've already been doing some things. But this is something you're going to have to keep close attention on. So yeah, a lot of moving pieces, man.
Definitely. I think that Solana's in a good spot. Again, they have the stigma of being the meme coin blockchain. This is a step in the right direction to possibly correct that. But at the same time, it's going to have to become a major player a lot more so than the meme coin stuff is. And that's just absolutely exploded on Solana. Granted, we're definitely in a down period right now where that stuff is not happening nearly as much as it was like 2 years ago, effectively. So could be a good time for a little bit of the narrative rebuilding. But overall, pretty happy with it. I think that they're definitely making moves that you could argue the Ethereum changes have been spurred by pretty much all of the stuff that we've been talking about. Whether it's the banks looking at trying to take their finances to private blockchains that are not permissionless, but actually permissioned, or it's other stuff like L2s actually overtaken when it comes to stablecoin throughput. Or now we're looking at real world assets growing faster on other chains than they are on Ethereum. Granted, as we showed with the chart, Ethereum is still head and shoulders above everyone else. They're 4x above their next biggest competitor, which is Binance. So overall, they're still in a good spot. But as it stands, yeah, I think you hit it on the head, which is like, this is the war that's happening in real time. It's happening in the bear market when no one cares, no one's paying attention. But
yeah, I know it's crazy, right? It's crazy. This is like, I don't know if it'd be this dramatic, but this to me is kind of like, this is kind of like the development of the 1920s, 1930s with the financial and structure that was being put in place. This is equivalent to the major overhaul that's happening, that changes how we live in this world is going to be done and transactioned. And it's so large that people can't even wrap their heads around it. And it's going to be big. To me, this is up there with the creation of the Fed. This is up there the creation of the BIS. I mean, this is like that's the foundation of what was put in place back there in the teens through the 30s. And now here we are looking at the digitization of everything in the world that you can't even fathom it. Like, for example, I've been shout out to the whole World Cup out there. It's been a phenomenal World Cup. But one thing I keep seeing is they keep playing commercials for the Polygon market, right? And everybody's watching it, and there are people asking me like, okay, what the hell is the poly market?
Poly market?
Like, yeah. And I explained to them what that is. And it's like, so these things we've been seeing all this for, like, we've known about this stuff for I mean, at least a year for that. And the predictive markets and all this, we've been seeing all this. People are starting to see it, ask these questions like, what the hell is this stuff, man? Well, this is what it is. And this is why this is happening. And then it's okay, how deep do you want to go into this? Because we live and breathe this all the time, and we're always on the show talking about this stuff. But just to put it out there though, the DTCS, they went out there, and keep this in mind, it wasn't until late 2025 that the SEC approved that they could tokenize. They could start moving towards tokenization. So that was in late 2025, right? Here we are now in 2026. Now they're shopping around trying to find who's going to be. They have worked with the Ethereum compatible networks, like we've already talked about that. They've also looked at Chainlink and Stellar. They've looked at those, and they've been working on various, pilot programs and stuff like that. So that's kind of what we were already alluding to, that they're going to start looking at what's the best fit, what can handle this. And like Tom Lee has already stated, it's security, it's scalability, and then it's going to be the throughput as well. And like he stated there too, they've looked at it, and the throughput would be nice, but they're going to take the other two much quicker, because if the throughput is not that much dramatic, it's not that bad, they're willing to take that over the other thing. And like I said, if you're comparing it to the Swift network, which is the dated system that's been around for the banking system, it's anything's going to be better than that. By light, it's like going from the speed of sound to the speed of light. As far as the two. So
Oh yeah.
it's going to be interesting to see it all come to fruition. But it's like you said. I mean, it's the markets are nobody's in crypto. Everyone's gone. It's like nobody's here. It's quiet as can be, and yet you're seeing these foundations getting laid, and no one's paying attention. Like nobody is seeing this and looking at it, unless you're in crypto like we are, just looking at this stuff. And most people aren't going to even understand it. So I don't know. We like having these conversations and talking about it. We like keeping everybody up to forum. I know we have our member chats too that we talk to, and we try to keep everybody plugged in on that. And we've also went into other investment opportunities. It's just right now, it's like there's not a whole lot from an investment standpoint with crypto. The real underlying assets, like there's some incredible chains out there. Shout out to Pulse Chain. Shout out to some other networks out there that are fantastic. It's just that there's no need to start dollar cost and average in anything right now. Right now, it's probably focusing on these bigger macro moves and these bigger networks to see potentially where we may be going. But outside of that, there's nothing wrong with DCAing into what coins you want to get into. I would just be very careful of DCAing into these extremely low cap to mid cap coins, because if we have another drop, they're going to get bludgeoned. But that's why I don't have a problem DCing into anything like large cap, like a Binance or Ethereum or a Bitcoin, or Solana. I don't have a problem with those because they're going to hold up because of all this stuff that we're talking about. Not to say that there's not going to be a new guy on the block. Like look at Hype. Hype is the one that just came on it because that's the predictive markets. That's the one that came out there that got everybody by surprise. That one just kind of went parabolic. And now that's tied to other companies that are out there on the networks. So Hype is a coin out there. It's being done by that's tied to Hyperliquid Strategies company, and that chart's been trading kind of wild on the predictive markets and stuff. But I think there's also a big bugaboo here on this one too about how people may or may not, they might be up for an investigation. Like some people are stating that they're doing something they're not allowed to be doing. So there's that kind of thing. We might be able to talk about that later on. But what I'm saying is there are pockets of things that are very interesting right now. It's just the overall markets are just so suppressed. But right now is the time to strategize. Right now is the time to start figuring out what you're going to do, what's going to potentially move, and get ahead of it before everybody else gets in here. Because by the time this stuff starts to move and turn around, most of the moves are over. And in the small caps, because that's the other thing, if you could understand which RWAs are going to work, now you got to get into those networks. Then you got to get into which platforms in those networks are going to benefit the best. And those are where the big moves, the big alpha is going to be, where you can be able to get into those much lower prices and see those 10, 20, 30, 100x, plus moves. You're going to get in those, but you're not going to know yet what that is and what you're getting into right now. So that's what I'm saying. It's getting into the details right now is not really necessarily, but just start figuring out where the moves are going to happen and start building out that shopping list to figure out where you're going to go after and start DCing into those positions. But like I said, outside the large caps, I wouldn't be touching anything else.
Yeah, I think you're spot on there. It's just not the season for small cap stuff. And to be honest, it's not really the season for anything. But as far as focus and what we're looking at for the next couple of years, the vision for the future is being built right now. And what we kind of get out of the next pretty much year is what is going to kind of set the stage for what comes next in the overall macro cycle. So as it stands, we're seeing the positioning between the major caps, a lot of the foundational technology stuff. Customers are going to come later. Believe me, I have no anticipation of people getting into crypto in 2026 outside of the people that have already been here and are specifically hunting lows. The hype is just not there. The price action is not going to drive demand, interest, or any sort of sentiment stuff that way. And unfortunately, as a result of that, the ones that suffer the most is not the overall crypto market, it's all the small players. So, yeah, again, my outlook for the small cap stuff is right there with you, which is that it's probably going sideways and down to the right for the rest of the year. As far as the other stuff, we're probably going to see a bottom forming on these things. Granted, we are predicting November-ish for the Bitcoin bottom based on 4-year cycle, but at the same time, the other large cap stuff doesn't have to bottom at the same time. Like just look at Ethereum in the last cycle. Ethereum bottomed in March of like 2022, and then Bitcoin bottomed back to pretty much in December there, as far as like the ultimate true bear market low. So it's possible that these things don't all follow the exact same formula. Granted, the trends are still going to be very similar, I would argue. But as far as the exact bottoms for the large cap stuff, they can drop at different moments. They tend to drop at the same time, but it's not outside of the realm of possibility that, like, hear me out. There's probably a token in the top 10 that may have actually seen its bear market bottom already for the year. It's possible. We're not going to know until we get confirmation later on, but this kind of stuff can happen. And the small caps, Godspeed, do the best you can. But as far as the building, we're in the building phase. And that's also where we as the investors start getting into the ground floor, like you said. Well said, sir.
And I'll take a step further. I'll say that I still feel like I'm in a camp that I could see. I think it would catch a lot of people by surprise if Ethereum starts to move before Bitcoin and starts to outpace it coming out of the bear market, just because the article we just said, you know what I mean? Like you have the narrative with MicroStrategies dumping all this Bitcoin. I don't even think we even brought that up. I know we were going to bring it up, but MicroStrategy just dropped how much Bitcoin did they drop?
They sold over 3,000 Bitcoin.
Yeah, and that's a lot. I mean, that's even for them. So now keep in mind, this is coming from This is coming from Michael Saylor, who said, never sell your Bitcoin. That was the worst statement he could have ever stated, because once you make a statement like that and you go back on it, now it
puts you in a corner.
You're losing confidence. You've lost confidence in your investors. You said you weren't going to do something. Now you're doing it. Why is that? Now he might have a justified reason. He might need to pay back to the treasuries or the yield that they're giving out for the stockholders on MicroStrategies and all this, whatever it is. You should never make that statement. You did. Now it's going to start looking bad. That's going to be a narrative that's going to keep being this big worrisome for these investors. That could put selling pressure on Bitcoin and Ethereum with the tokenization and everything being greased out here that's coming. Just on the articles we looked alone, I just feel like there's more potentially there. And keep in mind, Ethereum was suppressed. It never did anything. The last market move up. At least Bitcoin hit new highs and had a nice run to like $1.22 or 20. Yeah, $1.22 or something.
126.
Like yeah. And then what did Ethereum? It broke out a little bit to it.
49.50.
Yeah, it's a joke. Come on, it's a joke. Ethereum has topped so many times, it's ridiculous. Now, some people might say that's the third cycle curse. Okay, could be. Well, then that means we're past the third cycle curse. Does that mean that now Solana's going to face a third cycle curse? I mean,
maybe
it's those. So it's those things there too that we don't know. Like those are always things you got to be looking at as well. So I don't know. I just think it'd be interesting. I think it'd be hilarious if Ethereum started pacing Bitcoin out of this, because then it's like, wait, why is Ethereum? Because all it takes is price action like that to grab everyone's attention. For whatever reason, causes them it start to go up. That starts to build the narrative. All the things we talked about just feed into like, oh, this all makes sense. Now you start people buying in, the FOMO starts kicking in, and then Ethereum's off run, and it pulls everything else that's tied to it, that's pegged and tied to the liquidity bonds that Ethereum has on all these other chains with all these other tokens. So everything just rises, causing alt selling. I think that would be an interesting twist if it occurred, if it ran before Bitcoin. That would be a first. But hey, like I said, I mean, anything's possible now that TradFi is here. But yeah, interesting to see everything kind of coming to where it's going. I mean, I feel good. Like I said, I've been DCing in, and I've got another batch coming in. If it wants to go up and I can unwind some more stuff and then build up more DCA bags, I have no problem with that. Ultimately, right now, what everybody should be doing, in my personal opinion, at least what I'm doing, is like I want to keep lowering my dollar cost average all the way down on these positions that I've already got long term. I'm just building them out. That's it. Hunkering down now, buying when nobody likes it, and then when things are ripping and things are great, that's the time to start, unloading it.
I hear you. It's boring, hurts in the moment, but guess what? This is where the big gains are made. Well, half of it. The other half is getting out at the top as well. But you need one, you need both, but can't do one without the other.
Right.
Alrighty. Tell you what, folks, if you enjoy all the conversation we've had here tonight, and even more of the research that we did not have a chance to get to, you can find all that stuff over inside of our private Telegram, and you can find that by heading on over to walktheblockndf.com, finding the membership tab, and inside of there, you'll find the link to sign up for the private Telegram. Inside of there, you'll have access to the entire stream and video catalog that we have exclusively for our members inside of there. Of course, we will always be here on YouTube Thursdays at 7 p.m. or 9 p.m. Eastern time for you guys for free. And we love having you here. But the best, the latest, and the greatest, it's inside of the Telegram. So head on over there, get signed up, and we would love to hang out with you, share all of our information, hear what you have to say, and see what you guys are seeing that we are not, because it's big. News is massive, and we have a very hardworking team over here, but we can't capture everything. Anyways, around these parts, we like to say that the waters get rough, so don't sail through them alone. Come join us as we navigate digital finance together, private mentorship, exclusive live streams, Q&A. Go from beginner to intermediate to expert with us. We all work together. We can all win together. Alrighty, sir. That is it for the evening. Any final thoughts on our little Ethereum trilogy here? You feel better? You feel worse about it?
I do feel better about Ethereum just from at least a disclosure standpoint. They're giving you
I feel better too.
more visibility on what their game plans are, and I think that's going to just help build it. Now, like I said, I like how Tom Lee MicroStrategies is doing what they're doing. Well, not MicroStrategies.
Bitmine, Sharply.
Yeah. I'm more happy about what they're doing on that side, and it's starting to make sense now that we've been following this more about the marketing. So yeah, I think I felt good about Ethereum. I like the Ethereum price double bottoming. Like I said, it may not be the bottom, but at least it seems to be showing it's trying to fight the trend against the ETH BTC. That's be the final thing I'd probably say. Watch the ETH BTC ratio. That's the one you got to start watching. I think if we can get back up around 3, that would be pretty interesting. If we can get back up to that level, the 0.03 level on the BTC ETH ratio, or the ETH BTC ratio, that would be fantastic to see. Outside of that, I mean, really just keep connecting the dots and keep watching. And like I said, we're going to keep diving in and connecting the dots for everybody as much as we can, and seeing what's going on out there. Like I just said, right now, like nobody was talking about Amazon and all these other big companies when they were building things out. It takes a while. And if you could go back and look at any of these big companies that ended up being a lot, it takes them sometimes a long time to come to fruition. But essentially it's a network effect, and that's what it all comes down to. So we'll see and watch. We'll keep we'll keep our eyes on everything. It's fun watching it. I mean, I'm enjoying it. I'm enjoying the ride. Yeah, the price right sucks, but like I said, if you have a longer term horizon, the price action right now, you just look at it as opportunities to start loading up when nobody else seems to like it.
Yeah, if we didn't enjoy this, we wouldn't be doing this for as long or as deeply as we have been.
Exactly.
Yeah. All right. I feel good about getting the roadmap. I think it was the big thing we asked for. We got it a week later magically, so that's fantastic. At the same time, I think they got to execute. I think they're slightly better positioned. It appears that they have their priorities straight. Again, you just got to execute now. And as far as the overall markets go, yeah, 2 to 3 weeks, looking like probably some chop. Going to be testing some levels. Really, probably testing those moving averages, I think. But looking for a cycle low, pretty much sometime late July is what I'm looking at over here. And that is pretty much everything that I got here tonight. So, ladies and gentlemen, thank you so much for joining. Shout out to everybody that stopped by, Moonpilled Rational Optics and Chad Donner Swans, saying gentlemen and hello, fellow base crypto bros. Good to see all you guys. And we hope that you all enjoyed the show. Please let us know what you like, didn't like, give us the like, subscribe, all that kind of stuff. Anyways, that is what we got here for tonight. We will catch you guys next week covering the latest and greatest. Look, if we get Ethereum part 4, that'll be cool. I'm not expecting it. Hopefully we have some more interesting news and different stuff to talk about. But until then, we will catch you all later. I hope you have a fantastic weekend. So, ladies and gentlemen, good night.